Warren Buffett, the man, the myth, the investing legend. Today, we'll be diving deep into the mind of the Oracle of Omaha to understand what makes him tick and how you too can become a billionaire. Just kidding, we can't promise that. But we can promise an entertaining ride, so sit back, relax, and let's get started. Warren Buffett is a man who needs no introduction. But we're going to give him one anyway. Born in the heartland of America, Buffett started investing at a young age and quickly showed a talent for spotting undervalued stocks. He took over Berkshire Hathaway in 1965 and turned it into a juggernaut, with a market capitalization of over $600 billion. But what sets Buffett apart from other investors isn't just his net worth. It's his personality, his style of investing, his decision-making process, and his philosophy of life. Let's dive into each of these in turn. Warren Buffett's personality is often described as folksy, humble, and unassuming. But don't be fooled by appearances. This investment legend's astute mind and financial prowess have earned him billions. Buffett's personality traits that have helped him succeed include his patience, his discipline, his skepticism, and his ability to learn from his mistakes. He also has a knack for analogies, which he uses to explain complex financial concepts in simple terms. For example, he once compared the stock market to a casino, where the odds are stacked against you unless you know what you're doing. And he compared diversification to not putting all your eggs in one basket, unless you're really sure about the basket. Classic Buffett. Buffett's style of investing has evolved over time, but it's always been based on a few key principles. First, he looks for companies with a strong competitive advantage, or moat, that will protect them from competitors. Second, he seeks out undervalued stocks that are trading below their intrinsic value. And third, he takes a long-term perspective, holding onto his investments for years or even decades. Buffett is also famous for his aversion to high-risk investments, such as technology startups, and his preference for companies with a proven track record of profitability. In short, Buffett's investing style can be summed up as cautious, contrarian, and common sense. Buffett's decision-making process is based on a combination of intuition, analysis, and experience. He relies on his gut feelings to a certain extent, but he also does a lot of research, reading financial reports and talking to management teams. Buffett is also known for his ability to stay calm in the face of uncertainty, and to stick to his convictions even when others are panicking. He once said, "Be fearful when others are greedy, and be greedy when others are fearful." Buffett's process has evolved over time as he's gained more experience and refined his methods, but the core principles have remained the same. At the heart of Buffett's philosophy of investing is the idea of value investing. This means looking for companies that are undervalued by the market and have strong fundamentals. Buffett also focuses on investing in businesses that have a competitive advantage and are likely to be profitable over the long term. He's a big believer in the power of compounding, or the idea that small gains over time can lead to huge returns. Buffett's philosophy is also grounded in a deep respect for the power of markets and the importance of understanding human behavior. He once said, "The stock market is a device for transferring money from the impatient to the patient." Wise words indeed. Warren Buffett's incredible success as an investor and businessman didn't happen overnight. It was the result of decades of hard work, discipline, and patience. If you want to succeed as an investor, you need to be willing to put in the time and effort to achieve your goals. One of Buffett's key principles is to focus on the long-term value of investments. Instead of chasing short-term gains, he looks for companies that have sustainable competitive advantages and a solid track record of growth. By focusing on the long term, you can avoid the pitfalls of short-term thinking and build a solid foundation for your investment portfolio. Another important lesson we can learn from Buffett is the importance of doing your own research. Rather than relying on the opinions of others, he believes in doing your own due diligence and making informed decisions based on your own analysis. By taking the time to research and understand the companies you're investing in, you can avoid being swayed by the latest hype and make more informed investment decisions. Of course, no investor is perfect, and Buffett has made his fair share of mistakes over the years. However, he's always been willing to admit when he's wrong and to learn from his failures. If you want to succeed in investing, you need to be willing to learn from your mistakes and use them to improve your approach over time. So if you're looking to build a successful investment portfolio, take these lessons to heart. Be patient and disciplined, focus on the long-term value of investments, do your own research, and learn from your mistakes. With these principles in mind, you can start investing like Warren Buffett today.